and welcome back to Cheeky Crypto. My name is Nick, and today, guys, we're going to be jumping down into the world of BTC. Here we have Bitcoin paired up with USDT. We're actually on the 4-hour chart here. Binance is our data source. And if you want to replicate those or this particular chart, that's kind of what you're looking at. Now, I've zoomed out a little bit here just so you can kind of see the extensive amount of analysis that is done here. Just going to give you an idea as to kind of, why we think these things right now. You do have to be familiar with Elliott wave theory. Properly familiar with it, and not a lot of this other kind of stuff that circulates across the internet with some really loose rules. There's actually a lot of really important pieces of information with Elliott wave theory that are really important. And I've seen a lot of stuff circulated across the internet that just doesn't make sense. Just be really cautious with where you are getting that information from. But if you're familiar with Elliott wave theory and you understand the differences between 5-wave structures, 3-wave structures, and the different types of corrective 3-wave structures that contain 5-wave structures, then essentially you're going to be in a pretty familiar place with what this is showing us. If you're not overly familiar, then do join us down in our Discord server, linked in the description below. I am in the middle of actually releasing an Elliott wave theory course, but in the meantime, there is a PDF in our Discord server with 181 pages documenting out the ins and the outs of Elliott wave theory. So you can get a good understanding, and then you can kind of understand who's doing it correctly, who's not doing it correctly, and all that wonderful stuff. But let's just dive down into this, right? So yes, as you can kind of see on this chart here, we are looking at about 13,200, maybe a little bit higher than that or lower than that, somewhere in and around this number. And it's a big kind of 3-wave structural point, right? We have this big kind of move to the downside here, right? It's a big A, B, and C structure, as I've got it labeled, which actually falls inside this C wave structure here. Okay, so as we can kind of see, this kind of big A, B, C coming down, and C is being made up of what looks like a zigzag, which is basically 535. So nothing too unusual at this particular point in time, as you can kind of see here. Now, obviously, I have marked up on the chart over this side the June lows, the new lower lows, and obviously people who were calling this as your bear market bottom, then calling this as the bear market bottom. This happens every single bear market, with people just kind of guessing and hoping that this one sticks, and then they get a name for themselves because they called the bottom. But essentially, no, I don't think this is the bottom. Like I said, I don't think this was the bottom, and it's for lots of many different reasons. But the obvious one, if you understand Elliott wave theory, is you cannot think that they're going up with this overlapping structure here. This is very corrective. This basically just goes up and then gets rejected. Okay, so this is all short term. Nothing major is occurring here, right? And when we're seeing these higher highs and higher lows, these always tend to break to the downside. Okay, it's the other way around where you see the lower lows and the lower highs that break upwards, right? So understanding the structure is very, very important. Now, as I kind of come over to this side here, we're going to reflect on some of the real micro movements, right? But I wanted to kind of start this session off just by zooming out. So you understand that these micro movements that are happening right now, they are not really bullish. They are essentially just looking at real micro movements, and people are getting a little bit too carried away. If in doubt, zoom out, as they say, because the bigger picture is still very much in play. I will obviously just bring this chart up as well. We talk about these on Twitch all the time, but this is basically looking at 3 sized wallets, right? 100 Bitcoin or more, 1,000 Bitcoin or more, or 10,000 Bitcoin or more, and we get a very interesting picture. As basically whales continue to sell on retail, they continue to dump their positions, right? And until big money is buying, should we be getting too carried away when it comes to the price action of BTC? And the obvious answer is no. Essentially, retail money will run out, it will get dry, and eventually they will end up having to sell those assets to survive. And we talk about increased credit card debt during this recession. We talk about how savings accounts are also decreasing at the same time. Compound this with the seasonality that we are finding, this is a Christmas season as well, and people are living above and beyond their means at the moment. This is also something that is very obvious when we have the Fed deliberately looking to increase the rate so that people feel poorer, so that people cannot afford things. Okay, that's how they're curbing the inflation from a US standpoint. So they're looking for people to lose their jobs. They're looking for people to feel poorer. And at the moment, we've got retail still trying to live up to a lifestyle that they cannot yet afford. So that's a ticking time bomb. So we can have these kind of moments where retail kind of rallies up, and we can kind of see it here as well, right? We can see the price going up, so in higher highs and higher lows, and we break down, okay? And we can see these things over and over and over again, okay? So we can't get too carried away until big money decides it wants to actually participate, and they won't participate until retail is selling their assets cheaply to them, because there's always a buyer and there's always a seller. Okay, so with all that kind of introduction out of the way, let's go ahead and jump on down into the here and the now. Let me just zoom in on this fraction here just for a second. And what we'll do is we're going to just expand this up. Now, this is on a 4-hourly chart. I might even have to, I'm going to come down into the hourly just to talk about these micro movements that we spoke about this morning, just so you can get a good idea as to what is going on. So from the weekend, we said that we were in this triangular wedge pattern, and we're likely to revisit the supply zone if we were to break out of this to the upside, and if wise, we're going to come down to the demand zone. The demand zone is an area that we're going to have to revisit. We said that this is going to be the likely area of rejection, and this still hasn't changed. It's basically 17,274 to 17,447, and that is basically the area of rejection. We can see that we rallied up here. In yesterday's video, I was talking about this being a 5-wave structure: 1, 2, up here for 3, down for 4, and up into 5, up into that higher range. Obviously, we had the invalidation line. We broke the invalidation line. That was a positive because it meant that we could adhere to what was going on our 4-hourly chart. Let me just bring this one up here, get rid of this, and bring this to the 4-hour. Bring this down, get rid of that for a second. Here you can see that we had the 5-wave structure. We had our 200 EMA line here. We got rejected from the 200 EMA, but also our C-wave structure. This one on this side also marries up with a 1-to-1 ratio, which is what we were expecting from the fib relationships with our structure. So there's nothing terribly too much unusual. It's actually the yellow one, sorry. The yellow C wave here matching up with our 1-to-1 ratio at 17,381. So the fact that we found the 200 EMA, the 1-to-1 ratio with the yellow ABC structure coinciding was not a coincidence. So we said that there was a high likelihood that we were to break to the downside. So when we reflect on this kind of 5-wave structure that was invalidated by the move down, coming down lower, all that happened before the video even went out. So everything was kind of lining up quite nicely. So the fact that we got rejection from our supply zone makes sense. Means that we are likely to come back down to our demand zone, and this is where the buyers are going to likely be. Okay, that means that when we see all this activity right now, let me bring this to the hourly, what's actually going on here is actually just a B wave movement overall. Okay, so 5 waves down, 3 waves up, 5 waves down. This is a B, and C. Okay, so those who do not know, a zigzag pattern is classified as an ABC structure. There is 5 waves in one direction, 3 waves counter to that, and then 5 more waves in the direction of the move. Basically, it is defined as technically an ABC structure. So I use ABCs everywhere. That is technically incorrect, but I just find it easier for YouTube. But ABC structure is reserved for a 5-3-5 corrective pattern. Okay, so we are looking here at 5 waves down, 3 waves up, 5 waves down, an ABC structure. But as we were live this morning, on Twitch, we had our low target here that we were scoping out, 16,896. And during that live stream, we actually wicked down here to 16,906. So a little bit higher than where we were aiming, but pretty much exactly where we were thinking the price was likely to go to before we move on up. There's obviously an area of tolerance in here. You know, it wasn't exactly perfect bang on, but very, very close. We were within $10 of it. Now, as we kind of move on up here, you can kind of see that my C wave expectations on the move higher is about 17,132, but we have to adjust because our movements have also changed, right? We didn't go down as low as 19,906, right? 16,906, if I can get my words out, which means we have to push up ever so slightly higher here on that 1-to-1 ratio at 17,142. Now, when we think about this move to the upside, our minimum expectation is going to be on the double top. The double top comes in here at $17,102, which means we don't have to push any higher than that. We could find this as our area of resistance and just move on down from there. Likewise, though, that actually does mean we're above the 786, so we might actually have an opportunity here to actually hit the 1-to-1, maybe just slightly extend above and beyond there as well. But we'll be keeping a very tight, close eye on its movements. Essentially, the next big move will be to the downside downside, in my opinion, where we finish off this structure as a 535. If I go ahead and remove the fibs to make that a little bit clearer, you can kind of see how that structure forms out. We go down in this ABC structure, or three-wave fashion, which actually would be a WXY technically. And then we move on up here, again, probably another WXY. We are looking for 5 waves to come down though, and we'll be looking, of course, at landing in the demand zone. So if I go ahead and take our measurement of the 5-wave structure, I always miss the wick there we go, and I'll move it over to our high point, which we think is going to be about 17,142, then this shows us moving down to this area just here, about 16,594, which puts us right back into that demand area, which means this is the area that we are likely to see a push to the upside for BTC. Now, this, of course, is the minimum expectation based on that first 5-wave move over here. Okay, so because we've gone down in 5 waves, we go up in 3. The next are going to be 5 waves, but the extent to this move could change the output. Okay, so if this goes down more than 161.8% of this first 5-wave move, then we are going to be looking at an impulsive structure, not a zigzag structure. Okay, so we're going to keep a close eye on that, see if that plays out. If that does play out, then we will be dropping down significantly lower. Now, that would probably be more aligned to where my macro thought pattern is, as we have still got a bit of a journey to the downside to be had here. So as I said, we were looking at this slightly lower range. It's actually, yeah, it's a little bit higher there. So about 13,207. Up to a slightly higher range of around 14,753. Okay, this is the area that I'm expecting us to finally finish this particular pattern. Now, when this happens, this is where I estimate that we're going to have a bigger swing to the upside, something not too dissimilar to what happened in June. Doesn't necessarily mean that this is the bear market bottom, but it just means that I'm out of structure at this point. What happens next really is determined on whether we have a good run to the upside or whether we just continue collapsing down. Okay, so whatever happens after we hit these lows is going to tell us what the likelihood is of this being the bear market bottom for Bitcoin, or whether or not we actually have lower to go, at least in my opinion, using Elliott wave theory. So just want to kind of highlight that. There's a lot of things to kind of think about. Here's the daily. I just want to kind of highlight a couple of things on this daily chart, such as the higher highs and the higher lows that break down, and then of course the lower lows and the higher lows that then actually are the lower highs and the lower lows that break upwards, right? You can see these things time and time again. They are incredibly obvious, right? So just kind of bear these things in mind when there are trend lines going and being drawn all over the place. Bear in mind that, you know, when we have an overlappy structure like this, they are corrective moves. And if they're going down in a parallel channel to the downside, then we're going to break up. And if they're going in a parallel channel to the upside, then we're likely to break on down. Okay, so just bear that in mind. What we're really looking for are trends, and we are not seeing any trends just yet. Now, if I throw on... Yeah, let me throw this 200 EMA on here on this daily chart. This is something that gets used in traditional finance and stock markets and forex markets as a trend filter. Basically, if you're below this 200 EMA, you're in a trend to the downside. And if you're above it, you're in a trend to the upside. As clearly seen here in the 2021 bull market versus the 2022 bear market. Okay, so a lot of people are using the 200 EMA as your trend filter. They're not just using trend lines and thinking that we're in a bull market or anything like that. There is a lot more science behind these things. So just bear these things in mind, guys. There's a lot of things to think about, but I'm confident that we are yet to see the bottom. And until big money comes in, I'm not sure we're going to see it anytime soon. As I finish off this video, if you found it useful and informative, smash the like button. I do appreciate that. If you're new to the channel, subscribe, tap the bell, select all the notifications, and in doing so, you will be kept up to date with absolutely everything that we do here at Cheeky Crypto. And if you have not yet joined us in Discord, link is in the description down below. You're missing a trick if you're not down there, so do check it out. It's the best place to be, in my opinion. Until the next one, guys, have a fantastic day.